Good morning. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, bringing you the morning comment for the 21st of January. ECB meeting today. Are the latest measures adequate? The European Central Bank is expected to hold fire today, but to maintain the likelihood to react if inflation outlook deteriorates. At their last meeting, the Governing Council reduced the deposit facility rate by 10 basis points and extended the QE program for at least another 6 months. In the meantime, the bank expanded the assets it can purchase and decided to reinvest the proceeds from the bonds that mature. Some members of the Governing Council stated recently that they are skeptical about further policy action in the near term and that they need to monitor the effectiveness of the previous actions first. With the latest stimulus package just above a month old, we don't expect any change in policy at this meeting. Instead, we believe the bank will remain on hold in order to assess whether the risks to growth and inflation have risen, following the renewed fall in oil prices. After almost exactly a year when the bank initiated its assets purchasing program, ECB officials are likely to be questioned whether the previous measures are not exerting the desired effects and if more action is likely this year. After having raised expectations too high at the December meeting, ECB Draghi may also be cautious in his choice of language. He could simply stress the bank's readiness to act again and keep the door open to use all the tools available within its mandate. The market is already pricing in some further easing this year, despite Draghi describing the latest measures as adequate. A change to that language is needed to signal additional measures and weaken the common currency. Elsewhere, Bank of Canada holds rate unchanged. Bank of Canada officials maintain the overnight rate unchanged at 0.5% after taking into consideration future fiscal stimulus package and risks associated to the significant decline of the Canadian dollar. In the lead-up to the rate decision, economists were evenly split between a rate cut and on-hold stance, while investors, on the other hand, had priced in over 80% chance of a cut. As a result, the loonie strengthened in the event despite the renewed drop in oil prices. We believe that if the magnitude of the anticipated fiscal policy disappoints, then we could see further monetary easing. The prospect of further monetary policy stimulus from the Bank of Canada, along with the low oil prices, are likely to keep CAD under selling pressure. As for today's indicators from Eurozone, the preliminary consumer confidence for January is forecast to have declined at the same pace as in the previous month. In the US, initial jobless claims for the week ended on the 15th of January are forecast to have decreased from the previous week, while the 4-week moving average is expected to have increased slightly. The Philadelphia Fed Business Activity Index is expected to show that business conditions continue to deteriorate in January, but by less than the previous month. As for the speakers, we have only one speaker on Thursday's agenda. ECB President Mario Draghi will hold a press conference following the interest rate decision. For more information, including technical analysis, please read the full comment on IronFX.com or download our app and get all the information you need to trade delivered directly to you. And also, follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Sakis Paraskevov, Senior Fundamental Analyst at IronFX Global, wishing you solid trading.